Hi Maya, how are you
Hi,
doing?
Hi, Blessing. I'm doing very well. How are you?
Fine, thank you. So good to see your face again. As you're in LA right now, and I guess you just, moved in from Lagos. Now you're in LA. What has the journey been like?
Yeah, not as bad as it's being portrayed in the news. So this is my third or fourth time in the last year. I think, yeah, fourth time having to go back and forth over the last year. And yeah, it's not as bad as you would expect. It's the people, planes are still full to their reasonable capacity, and travel
Oh wow.
experience isn't any bad, it isn't any worse. I'd say the worst part about it is the COVID test.
Oh, and I can imagine how many times you had to do that,
Yes, every time I
traveling and everything.
leave, as soon as I land, 7 days after I land, when I want to go back, yes, it's a lot.
Anyway, so today we'll be talking about the venture capital space in Africa, and you're
Mhm.
one of the queens when it comes to that. You've invested in over 40 companies and you
Queens.
recently and you recently just had Paystack, exit to Stripe. There's so much going on in your life. So, I mean, before we go into the details of all of that, tell me a little bit about you, your journey. What brought you here right now?
Yeah, it's a lot of little things that cumulatively became, I think, now a pretty big thing. And starting with, my dad and his brothers moved to the US for higher education, and they all settled down in rural Minnesota. And so I grew up with this really interesting case study of watching a bunch of Nigerians in Nigeria building businesses and a bunch of Nigerians in Minnesota building businesses, and grew to understand the deep resilience of the African
Mm,
entrepreneur that I've never seen in entrepreneurs elsewhere in the world. That and also, the entrepreneurs when they were in Nigeria, they failed significantly more, due to
yeah.
nepotistic, infrastructure and underdeveloped banking and lack of access to capital and all these things. But when they did succeed, it was far outsized those of their Western world counterparts. And that's because of the concept of, or what I grew to understand, of the greater the risk, the greater the reward, and an understanding of the need to develop, but the opportunity that exists within greenfield markets. And I think that really set something from day one, of business building, and really just directing my career. And studied, or up to high school in Minnesota, then pre-law program at Cornell, and undergrad at Pomona College, and worked at JP Morgan in private equity research. And I think, just understanding the role of regulation relative to capital, really growing to understand that access to capital really is my belief in what can most rapidly improve societies, economies, and infrastructure at large. And so that as my starting block. And at first, I tried raising a fund, $50 million fund at 23, and I didn't get very far due to having a year of work experience. And so instead, I launched an advisory firm to assist global investors to enter and operate across Africa. We worked with over 50 firms, ranging from Y Combinator, 500 startups, Techstars, et cetera, GitHub, Figma, all the guys. And our clients went on to do more than 50 investments in Nigeria alone. Um, so that's that on that side. We launched the fund in 2017, Fund One of 10 million. We just launched our $50 million Fund Two, the raise for it this year. And then, as you know, Ingressive for Good was launched last year as well, a nonprofit that does micro scholarships, technical skills training, and talent placement. I say micro scholarships, but it also is just straight up university scholarships, so micro and university scholarships. But yeah, I'd say that's a fast short of the journey.
That sounds amazing. And like I just went right into it. It would be super nice for us to introduce ourselves. So first off, my name is Blessing Abeng, and I'm the Director of Communications at Ingressive for Good. And this is Maya. I will let Maya introduce herself because she does an awesome job. But Maya is the MD of a VC of a $10 million fund called Ingressive Capital. So Maya, I'll let you introduce yourself. But today our topic would be how venture capital is shaping the tech ecosystem in Africa. And, they couldn't have picked anyone better than Maya to do justice to this topic because she's super good at it. So, Maya, go ahead. Like, how would you like to introduce yourself
Yeah,
beyond
I
what I
mean,
said?
I'm founder of Ingressive Advisory. I'm founder of Ingressive Capital Fund, $10 million Fund One, and now $50 million Fund Two. I'm co-founder of Ingressive for Good and Forbes, two times Forbes 30 under 30, Africa and US VC, uh, MyPad member, blah blah blah, all the things. Not all the things,
I
just
know.
those
No,
things.
but the list really is long. We could go on and on. I know the list is long. And I know you have a Wikipedia page. So, guys, when you're done with this session, feel free to just Google Maya. Like, she has so many interviews, so many interesting things about her story. And there's really one that I'd like us to come back to, which is you were about to start, and then, people told you you didn't have enough work experience. So let's talk about how you closed your first LP. How was that like? What was different about it?
Yeah. So I originally tried like I didn't, and also as context, I had no family connections. Like my mom was in the military. We grew up really poor in rural Minnesota. My dad, a pastor in Lagos, and no business, no interest in the business side of things, no interest in doing it for money. Literally just there to serve the people, and so no family connections in any capacity starting out. And so when I had this idea to launch the fund, I literally started going door to door and reaching out to people on LinkedIn and reaching out to people on Twitter and literally going door to door to VC funds in Sand Hill and across the U.S. Pitching our story and saying, I'm not going to leave till you commit, someone to coming to the continent with us or working with us. And that resilience and persistence and just courage to show up, like keep showing up, keep showing up, keep showing up. And it was about 6 months before I was able to close our first investment tourism client, as in the first person to come to the continent with us. And that was the CIO of Techstars. And we had the one of the partners from 500 Startups, and then a number of private investors, the CMO of New Relic, et cetera, a number of people that we were able to convince thereafter to join us. And yeah, I'd say it took it. I thought it would just be, oh, I'll have a quick conversation, they'll get it, and then we'll close, and then we'll start doing deals. But yeah, it took 6 months to get our very first client to the continent. And then it took 3 years of active investment advisory work before those clients transitioned to being investors in the fund. And it was really about being consistent, building the narrative, and then every opportunity, even if it's an initial no or an initial maybe, is a business relationship to be able to launch and cultivate and nurture, and then eventually either they directly themselves transition or someone in their network does.
Between the time you came to Lagos and now, how would you say venture capital has affected the ecosystem? How would you say it has impacted the ecosystem?
Yeah, VC in Africa it's crazy how it's grown at such an unprecedented rate. Like in 2016, there was only like $129 million that came in the ecosystem. 2017, there was 560. 2018, 1.2 billion. 2019, et cetera, et cetera. It keeps growing at an incredible rate. And last year, if you're counting the Helios Towers IPO, I'd say we're well over $4 billion per year in VC dollars and IPO. And so never before in history have I seen an ecosystem, and not that I've watched a lot of ecosystems cultivate from the beginning, but as far as my research, like a 2x growth in VC dollars, a 2x growth in the market opportunities, like that's incredibly unprecedented. And just imagine, being the first VC in Sand Hill in the US, like that's what we're seeing on the continent. That's what we're growing on the continent. So not only from the amount of venture capital that's coming into the continent, but actual M&A activity and IPOs, from the Helios Towers to Helios in Toronto to Jumia IPO on the New York Stock Exchange, in the formal, Western country IPOs. And now this is a real thing. If you're building a company on the continent, you can say, yeah, I'm going to be on the New York Stock Exchange. That's our target. Before it's like, ha, ha, ha. Good story, chap. Now it's a reality, and people have pioneered that path already. It exists. We know the playbook now. And aside from that, meaningful M&A, hundreds of millions of dollars. Our portfolio company, Paystack, just sold for over $200 million. And so the opportunities to realize liquidity, whether through secondary share sales, whether through IPOs, whether through M&A activity, whether, there's all these different options that are real now. And even, cryptocurrency, initial coin offering, ICOs, there was like $7 million in one day raised by a company. Maybe I think that was like 2 years ago in Lagos.
Yeah.
So just there's incredible opportunity, and there's incredible unprecedented growth that I haven't seen elsewhere, even from the consumer, as far as the tech penetration, the developer growth, the designer growth. Nigeria has had the second fastest growing rate of peer-to-peer Bitcoin transactions in the world.
Sure.
Only second to China. Last year, only second to China or the US. This year, et cetera. So just really, it's incredible. I'm continuously baffled and impressed.
Yeah, I'm actually very impressed by that as well, because a lot of unicorns have come out of Africa. A lot of unicorns, like way more unicorns than we would have expected. And it means like it's an opportunity for a lot of international investors to swoop in and make 10x, 100x, 1000x their investment. So it's like Africa is such a beautiful, should I call it a soil? It's like a beautiful soil to plant the seed of your money and, expect huge returns if you do it well. However, have you ever lost money investing in a company, and what did that feel like?
Yeah, I mean, it's part of the game. We build out our model such that we anticipate 60% of our companies to fail and only 40% of the companies to survive. And that majority of those ones are only going to do, up to 5x, and we'll only have, we anticipate 10% of the portfolio to produce meaningful outsized returns. And those 10% will return everything else. Excitingly, it seems like we're going to do better than that. But just to be, absolutely conservative in the models that we built out for investors, we anticipated the vast majority of our companies to fail. And so, it was kind of, it was absolutely a learning lesson. So we celebrated, and that we're like, now we know what not to do. another diligence question in our list of things that we shouldn't do or need to be more mindful of. We've had 2 companies in our portfolio of 30 investments. 2 of them have failed. And there's never, there's not going to be any, the question isn't, how could you invest in a company that failed? The question is, how could you not know exactly what happened in that situation, be able to clearly articulate it? So we need to make sure, of course, in venture capital, you anticipate that a meaningful portion of your portfolio, the majority, or, whatever it is that you've decided on your model, if you're taking less risk, maybe less than majority, and will fail. But in that, it's so fundamental to understand, to be able to look back on the experience and to glean new lessons and new diligence points from that experience you can learn moving forward. Like for us, some of the lessons that we learned and that, I'm really grateful for is, one, if you're investing in a consumer tech company in Nigeria or Greater Africa, and this is in general, it's clear news, but it was just reiterated. You need to see meaningful, 30% plus growth in month-to-month core metrics, like users, new users, GMV, revenue, et cetera, all those things. You're targeting for higher double-digit growth. And if there's a dip in it, you don't invest in with anticipation that retention will be recovered. You wait until you have all of the key performance metrics that you're looking for in order to invest. And it's never they in the continent there are incredibly competitive deals, and you can be priced out if you wait. But I, as an active investor, I'd say the times when I felt meaningful pressure, like I have to close this deal immediately or I'm never going to get access to it again. There have been, 54 Gene was one of those companies, and I'm very happy. Those were one of the outliers where I 100% am grateful that I was able to move really quickly and close that deal. But the vast majority of the opportunities, there was a reason that there was that pressure, and it wasn't always for the positive. So being able to go slow, or to complete all the diligence steps before closing an opportunity, and be very practical and mindful of that. And the other thing that we were aware of, and now it was just doubled down, is you need to ensure that founders stay incentivized through their equity and ownership. And if the company's at a pre-seed and seed and has already given away 30, 40, 50% of their business, that's an incredible red flag, and we're not going to move forward unless there's, incredible or extenuating circumstances or something, clearly outside of the normal company building. And if they have no reason to raise again moving forward or something like that. But for a typical startup in Africa, the founders are going to be de-incentivized if they're already at their Series A. I know in 30 or
Yeah.
less percent of their business. And that's not a sustainable business model. So really remembering the importance of ownership and ensuring to maximize for the founder to ensure their long-term commitment to the business.
Thank you so much. Those are great tips. And I see like how that would benefit the VCs. Now let's talk about the startups.
Mm-hmm.
How can startups, now we're getting lots of VC dollars in Africa. How can startups better position themselves to be able to, enjoy a little bit of the pie? And while we're talking about that, it would be so great if you could touch on reporting as well, how important reporting is as a startup to your VC.
Mm-hmm. Mm-hmm. I'm not sure what you mean at the first part of your question. I understand the reporting question. I'll answer that. But what did you mean by the startups to get a little piece of the pie? What did
Oh
you
no,
mean?
I'm saying now that VC dollars are flowing, like we're getting a lot of money and investments now. So as a startup, how can I better position myself? Not me, but like the startups who are listening, how could they better position themselves?
And absolutely through reporting and open and honest communication. And so a lot of times founders come into it thinking, I have to have this bravado and present information that's clearly outsized realistic expectations. And, though I only have 30 users, I should say that I have 30,000 users and, include this list of contacts that I got access to, that there's 30,000 on that list. And I can say they're my clients, but they're not actually active users or anything, but I'm going to say that, the every data point and every interaction that you have with an investor is showing the type of entrepreneur that you will be. And so being mindful of that in the way that you communicate honestly and objectively, in the way that you have realistic expectations. If you're coming to me and saying, my market is, I'm focusing on the Legos market alone and it's worth $10 billion. And I'm like, that's interesting. What's the total GDP of the Legos market? So being very realistic and practical, because then I'm like, if you're communicating this wild and inaccurate information to me, now this is what you will do when looking at an opportunity, when negotiating with a client, et cetera, et cetera. So just recognizing that every one of your interactions is a projection and demonstration and data point for how you will run your business, and be mindful of that. And so as far as with reporting, it seems overwhelming at first, but it's actually quite simple. You just include, and there's a lot of it doesn't need to be fancy. It doesn't have to be a PDF or PowerPoint. You can literally just say, hey, investors, monthly updates. And say you pitch to investors and they're like, hey, we want to keep in touch. Let's build a relationship, blah, blah, blah. Having a list of both active and potential investors. You can have two sort of MailChimps, one who are your current investors who you send out your monthly and quarterly or just monthly reports to. And then you can have the tentative investors, and maybe there's some information that you keep out that's confidential, like the name of new, business contracts or pending or what have you. But for the ones who are your active LPs, you need to have revenue, you need to have, GMV, if that's relevant for your business. You need to have your core metrics like MAU, DAU, WAU, if you are a consumer company. Basically, I don't need to go into all those details, but decide what are the most important KPIs, key performance indicators, for your business in order for it to succeed. Like, in order for my lending startup to succeed, I need to get a lot of access to debt capital. I need to deploy a lot of loans, and I also need to keep my default rate very low. And so those are going to be, core metrics that you'll show your investors every month. And it's tailored, obviously, nuanced per business, but just keeping a close watch on, say, 3 to 5 core metrics, and then giving an oversight on like how you can help, how the investors or how the people can help. So including a few bullet points on things that you need, whether it's we need help with an intro to this bank, or we're looking for this new hire, blah, blah, blah. And then including any highlights for the company. Really short, just bullet point, 3 sentences for one part, 3 sentences max for the other part, and then you're finished. It should take, of course, collecting all that information will take time, but crafting the actual email shouldn't take you longer than 20 minutes.
Yeah, and then obviously super high level.
The same. Mm-hmm.
Super high level. I love it. And zeroing in on the communicate and on the customer part that you talked about, right? One of the key things I noticed is people don't do their research. If you do your research, and beyond just research and actually talking to the people who you think are your customers, you get a lot of insight from that. Beyond just assuming, a lot of founders sit in their chairs and they're like, oh, my customer is this person, they're going to do this, XYZ. Or you haven't really spoken to these people. They don't even know who you are. You've not tried to interact with them. Of course, surveys are good. Of course, data is good. But, sometimes that conversation would give you so much more insights. And then like
Absolutely.
understanding that your audience is different from your customer, your consumer is different from your customer. So important, like nobody's going to be selling baby diapers and they're like, oh, my target customers are the babies. Of course not, they're not. They're your consumers. So probably your focus would be on the parents. So just like being able to differentiate and make it very clear to your VCs or whoever you pitch into that you really, really understand the business and who you're serving just makes everything so much better. So yeah, thank you so much for that tip, Maya. So COVID.
Thank you so much for that tip, Blessing.
Let's talk about COVID. So how did COVID affect you guys? Like, how did it affect Ingressive Capital?
Yeah. So interestingly enough, we deployed almost 3 times more capital last year in 2020 than the 3 years before that, 2017, 2018 combined. So we deployed almost 3 times, over 2 times more capital just in 2020 than 2017, 2018, 2019 combined. 1, we increased our ticket sizes, and 2, being able to conduct diligence remotely and just focus on the objective and quantitative metrics has really transformed our businesses, and we've done some of our best deals. Obviously, every year we do great deals, but in 2020, some of our best deals happened last year. And I would say COVID has certainly helped us take out the subjectivity, because before it used to be like, oh, you should, you have to sit with founders and have that gut feeling that they're the right ones. And it's like, no, that's just bias. That's just you being like, oh, pattern matching. Like, I see a bunch of things that I recognize here. They're the ones. Nope, that's not how you find and identify the right type of founder. The way you do so is by looking at the numbers and their growth and to understand their product market fit, to talk to people. Like we've incorporated so much, like we do 10 to 15 reference checks for every founder that we invest in. And not only is it to their former investors and former co-founders, if they've built a company before, their current investors, to understand, their how they are about reporting and communicating and receiving guidance. And then we talk to their customers, of course, to understand the product and their interest in the product. We talk to competitors to understand if they're even a relevant participator or seen as a market leader in the industry, and their current employees, to ensure that everyone in the organization sees the same value, same mission, and there's a consistent communication of objectives, et cetera. And sometimes we do, industry experts, et cetera, things outside of that as well. But that in and of itself gives so much more clarity than us sitting with them and, picking at a couple questions and being like, this guy's the one, So yeah, COVID has been helpful in this capacity. And I would say it's actually turbo boosted the majority of our portfolio. Fortunately, about 80% of our companies had raised meaningful funding within, I'd say, like 3 to 6 months before COVID started. And so they were good for, 18 to 24 months. We only had maybe 20% of companies that needed to focus on fundraising over the course of the last year. And as such, like that was just, a freak encounter. And likely because majority of our deals were in the last year. Outside of that, I would say it's definitely impacted our team dynamics in that everyone's working 100% remotely and prefer to work 100% remotely, and taking out that traffic time, et cetera, et cetera. It's interesting because first we were just focused exclusively on the professional, like, what are your KPIs? Here's our meetings, get this stuff done. Here's your JD, da, da, da. But then we realized people still needed that human connection. And so now we've started incorporating and trying to figure out, okay, do we do, once a week or once a month events where we come together and just have fun as a team? We went to the beach, as you knew, last month.
That was fun.
Yeah. And just thinking of like, how do we stay cognizant of the mental health needs of our community, of our tribe, of our companies, and how do we ensure that there's a proper balance of, staying focused to the core KPIs, but also building ourselves, like building a culture where people feel, even we within the company, not just our founders, but we within the company feel comfortable sharing our honest experience, asking for help, and supporting each other through these moments.
So let's even talk about that beach experience, because that was really cool. One of the key things we had was like a knowledge sharing session where all the founders came together, and then, they were sharing their challenges. And one of the key challenges that kept being mentioned was the issue of talent. Yeah, it was the issue of talent. So here I am asking myself, you have all this money probably as a founder, you've been given all this money. How do you maximize talent? And then how is the VC firm? I know the answer to this, but I mean, it would be nice for everyone else to know. How is the VC firm, or how is Meyer, helping the founders with the talent issues that they face right now?
Yeah. So I'm just like, do you want to answer your question? Feel free to expand on anything that I do say. But as far as with the VC fund, what we understood, of course, with Ingressive for Good. Ingressive for Good was launched because at Ingressive Advisory, we had these programs to grow the total addressable market of technical talent and those in the tech space for our clients, both VC clients and big tech companies who were coming to Africa, who obviously wanted, people on their mobile devices and understanding how to build code and understanding how to build products, because that would mean that that the tools that they were bringing to the ecosystem there would be an increased demand. And so part of our job, in addition to bringing those clients and launching products, was to grow their TAM or total addressable market by going into universities and supporting the computer science departments and leading hackathons. And you can talk more broadly about these different programs. And we built up like a 10,000 member ambassador network of developers who were sharing resources and collaborating together, and for whom we were sending funding and et cetera to support their growth. And that program was taken out of Ingressive for Good, it was taken out of Ingressive Advisory and then put in a standalone organization. And that, in part, it was just really effective at training technical talent and supporting technical talent. And then also, as far as relative to the VC firm, in places where you're building businesses and there is underdeveloped infrastructure, you have to backwards integrate and control your supply. And for us, that's two parts. For us at the VC, that's two parts. That's one, supply of talent, because we're constantly investing in startups. And when we invest in a startup, that means that they're going to need to hire new talent. And then the other part of it is controlling the supply, or actively doing things to increase the supply of investable companies. And we can do that by growing the number of people who generally have access to technology and are learning technical skills at large, and allowing them to just go off and explore where they will. And so Ingressive for Good is such a great partner to Ingressive Capital, because it's focused on those two parts, really, building up technical talent, increasing the earning power of African youth. And we're finding now that that full circle is happening. The people who were sponsored, for whom, or when Ingressive for Good bought them laptops and data and paid for their computer science degrees, so many years back, we're now seeing these people applying to Ingressive Capital for funding, who've gone on to build successful businesses to really launch in market. And so that full circle is what's so exciting and so promising. And for us to continue to be able to build and support a founder from the time they think, I want to be in the tech space, all the way to the time they IPO their business. Is there anything that I missed there?
No. I mean, you covered it perfectly. However, if I could add anything, I remember when you reached out to me and said, Blessing, Ingressive for Good is something that I'm super, super passionate about. And I think you'd be one of the best people to drive it. And I felt so honored, but I also understood how important it was, right? And, one of the most, when we had COVID, we were starting in the thick of COVID. This was like June, and everything was tricky. It was like, are you sure we could do this? Are you sure this is something we could kill? However, here we are, having this partnership with Coursera and training 5,000 people when we plan to train 2,000. And then DataCamp is reaching out to us and saying, hi guys, we have 6,000 licenses, train African youth, give them as much education as they want. And then we had the Facebook partnership, and just so many partnerships and just so many technical trainings going on at the same time. The beautiful thing about the micro scholarship is the, being able to support people in Ivy Leagues of Africa, which was also perfect. But I don't know, Maya, if you remember the story about the lady who initially used to make soap, and making soap was how she supported her family. And that was just such a touching story, because from making soap, she reached out to us. She had this technical training. We're able to support her with a laptop and data. And next thing in January, she's calling us. I mean, this is less than the space of 6 months. She's calling us and saying, "Hi guys, hi Ingressive. I just got a job. I'm now a back-end developer at a tech company, and I never believed that this dream could come true." So that's like amazing. And I can really imagine that in the next 3 years, 2 years, 1 year, she could probably come up with a great idea, and we probably would be the ones to fund it, or anybody who funds it.
Absolutely.
Ingressive for Good will always be a part of our story. So that's amazing. It's also so weird how COVID looked like something that was going to be super scary, and then so many beautiful things were born out of it.
Absolutely, definitely.
Yeah,
and
so
I don't want to underestimate the
go
importance. Even if she doesn't go on to start a tech company, there's like a company goes nowhere without its technical talent and without a core team. And so there's no possibility that a company can scale without those people going in and building with the founder. And so, yeah, I mean, I'm incredibly impressed constantly by the work that you guys do at Ingressive for Good.
Thank you. And I think one of the most important things that we really talk about is the power of entrepreneurship, right? Like everybody is crazy about entrepreneurship. Yeah, that's great. But entrepreneurship is just as important, because without Tim Cook and Apple, what would be happening? All of these people, we need people to drive the vision. Everybody cannot be founders of the vision. Some people have to drive it. And so that's why Ingressive for Good is so important. And I really don't, I don't take it for granted. Yeah. So yeah, I mean, guys, if there are any questions, please feel free to, throw those questions at us. We have like less than 9 minutes, and I'm going to rush through any more things that I think you should talk about. So what would your advice be for investors who are trying to get into the African market? What should they look out for? How can they go about it?
Yeah, so I actually was on a Google for Startups panel or presentation yesterday, and Lo Tony of Plexo Capital was one of the speakers, and they were talking about tips for angel investors. And one of his tips were, when you're first coming into the market of wherever you're investing, he wasn't talking about Africa. He was just saying when you're first starting to invest, just look at deals for a year. Don't write a single check. Just watch companies and track everything you see for 1 year. And that will give you, because you don't realize, this is again general angel advice, and I'll give Africa specific, but you don't realize, you see 10 companies and then one looks good. You see 100 companies, and then you're like, oh, actually there was only maybe one of the 100 that's good. And then you see 1,000 companies, you're like, this one company. And so to understand the scale, to understand the size of the market, to understand the quality of the founders, the quality of businesses that exist, does take a while to ease into that. But as far as Africa specific, I would say definitely working with a local co-investor. People come into the ecosystem thinking like, oh, this is the same as the US market. Like, oh, there's, startups are the same, people are building the same way. But actually there's so many nuances to building in Africa. And also if and only if the volatility of the local currency and the volatility of the regulation, particularly in Nigeria. And so, and Egypt isn't significantly better. I would say Kenya and Ghana that aren't sort of natural resource rich countries and do have to have an amenable business environment for FDI, foreign direct investment, as well as for technology or telecommunications and financial services. They're a lot better, but I don't think a foreign investor can come into the market and understand that one day it's acceptable for your startup to be operating in the country, and the next day they have to shut down, or they have to entirely pivot their business model or house under, a traditional banks or traditional businesses infrastructure and licenses, and also Pan-African expansion. You come to the continent, you're like, people are like, oh, let's launch across Africa. Africans do this. And I was like, you know how many 1.2 billion people? They're not the same. So the understanding of the nuances of the African market, I think, even neighbors like the Ghanaian consumer relative to the Nigerian consumer, or even the entrepreneur, and how distinct and different it is. And then, Cote d'Ivoire and Senegal, like how different these ecosystems are, and what are the consumer profiles? How deep is the tech? How accessible is venture capital dollars in general? And how how much technical talent is there? What is the cost of data, et cetera? All of these questions, the markets are so nuanced. And so really understanding that. And so my advice for investors looking at the African ecosystem would be like, work with somebody on the ground. You will lose your shirt and your pants if you are trying to just throw money at a startup from sitting at the office in Silicon Valley and trying to source deals for yourself online. Definitely work with an expert on ground. 80% of our limited partners in Fund I, limited partners are the guys who invest in our fund. 80% of these guys run later stage investment vehicles and leverage us for local deal flow or local diligence, et cetera, et cetera. And so, or to get access to the companies that we invest in the pre-seed and seed stage. And so definitely working with a local partner. I can't say it enough.
Yeah, I like that you highlighted that Africa is not a country, it's a continent. And there's so many different types of people in Africa. So when you're coming to Africa, you have to be very specific about where do you want to go, where do you want to focus on, and then expand from there. I mean, IWD would be in a few weeks or days. As a woman, do you feel like, or in general, do you think women in Africa who run businesses have more, or rather have less access to most of the VC dollars coming in? And what do you think they can do to better position themselves for this?
Yeah, I don't like these questions. Like, what do women not have?
I had to ask you. I had to ask you. I know you
ask
don't
me
like
what we
that,
have. Yeah. Okay.
Okay. So then, tell us what we have.
Is,
if you tell us what we have, maybe
I'll tell you what we have. Yes. So us, I mean, 64% of Ingressive Capital is female. Like you guys, I'm pretty sure majority of Ingressive for Good is female as well. And about 40% of our portfolio companies are female founded and co-founded. So we don't have that problem. And if you look at the VCs in Nigeria at large, like Alethea Capital, the oldest and the largest $75 million fund, all female executives, female investment mandate. You look at, Odun and Eloho and the fund that they just launched specifically and exclusively focused on investing in women. There are multiple women-only investment funds, venture capital funds that have launched. And if you look at all of the most prominent VCs in the industry, I'd say like 80% of them have female senior executives. And so to say that the people sourcing and looking for and actively accessible to invest in women entrepreneurs are across the continent, and you'd be hard pressed not to find them, particularly in the Nigerian and the Kenyan ecosystem. And outside of that, I would say talk like just Google it. They're not hiding. They're there.
Yeah, thank you so much for those tips. If I could give any tip at all, it would just be consistency, because even if a VC doesn't invest in you right now, it doesn't mean they're not going to invest in you in a year's time. And as you said, sometimes they might just be watching you to see what are you working on, what are you trying to get done.
Exactly.
And if you stop just because one VC said no, you lose out on that opportunity. So be consistent. And one of the funniest things I learned during COVID was that consistency doesn't mean not showing up. It doesn't mean hiding when you miss a day. Consistency is not about missing a day. Consistency is when I miss a day, I still show up the next day because I don't have a choice. It was so weird because it was during COVID. I was just brushing my teeth and I'm like, hey, we're consistent at brushing our teeth. We're consistent at having our baths. We're consistent at sleeping, eating, and all those cool stuff. So why is it so difficult to be consistent about work that we care about? And it just made so much sense that even if you miss a day after brushing your teeth, no matter how bad it is, you will still show up. You will still, continue the next day and probably brush harder. So don't give up just because someone said no. Like, just try harder because they said no, and show up consistently as often as you can, and find a mentor, find someone you could ask questions. And even if you don't find a mentor, come for events like this and listen to what they're saying. Chances are they're going to ask you questions, and you're going to get a chance to ask a question. Yes. Thank you, Maya. You were so amazing to talk to. It was so much fun talking to you. What's your favorite food?
So I'm basically a vegan that eats seafood right now. But yeah, don't ask. That just means I eat fruits and vegetables and seafood. I don't eat any carbs or anything like that. But before this, my favorite food was egusi with roundabout. I was
expecting that.
I love a nice plenty amala, but these are things that I can't eat in my new lifestyle. But they were back in the day. I remember that's meat. It's so nice. So that was my favorite food. Now I just eat a lot of bird food, and we live our lives. But on the note, last thing on the note of consistency, I pitched to, I'm not joking, like 1,000 investors, or like I sent our information to well over 1,000 investors. I had nearly 400 straight pitches, like going to somebody's office, presenting the information, sitting in front of, people asking me questions and answers, blah, 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 or having like a Zoom presentation, blah, blah, like 400. And we have 40 investors in Fund I. So of those 1,000, only 400 agreed to connect live. And of those, only 40 actually agreed to invest in the fund. And so when people are thinking, they get so discouraged, thinking, I'm never going to be able to, or like they get their first couple no's. For us, my first probably 40 pitches were no. And then if I had the idea of like, it needs to be a yes, and if it's not a yes, this means like everything's going to fail. Stay persistent, take advice and feedback. If a VC says no, and gives you specific reasons or things that you need to work on, consider it a free consulting session with an expert who sees a lot of businesses in your same space. And also anticipate, it's a numbers game. Anticipate 1 in 10, 1 in 20. And then you get 1 no, great. Now I need to get maybe 10 more no's, and then I'll get to my next yes. It's literally a game about persistence and consistency.
Thank you so much, Maya. It was so much fun having this conversation with you. Hope to connect when you're back in Lagos.
Yes. See you soon, Blessing.
Bye.
Bye.